Let's talk about getting charge-offs removed from your credit report. I mean, the thing is, when you have a charge-off, I mean, this can really bring your credit score down and really damage your credit worthiness overall. So, in today's conversation, I want to share with you our approach when it comes to getting charge-offs removed from credit reports. So, let's first define what a charge-off really is, so everybody has a clear idea what I'm talking about. So, a charge-off refers to when a creditor determines an account is too overdue, delinquent to continue attempting to collect the debt, right? Most creditors will only charge off accounts that are between 120 to 180 days outstanding. So we are speaking about 4 months to 6 months outstanding. And a creditor can be a credit card issuer or lender. And creditors begin the charge-off process once a delinquent account reaches default status. And this involves closing the defaulted account and removing the debt from the creditor's books. And at that point, most creditors sell the charge-off account to a debt collection agency or a third-party debt collector, typically for pennies on the dollar. So while the charge-off means the original creditor will no longer attempt to collect the amount owed, you still owe the debt. And typically, debt collectors continue collection attempts, which includes phone calls, sometimes at very crazy hours in the night, okay, or early in the morning, emails and letters. And some debt collection agencies will also sue the debtor for the amount owed and try to get a judgment, which is a court order to pay the debt. Okay, so the charged off account is recorded as part of your credit history in your credit report. And the three major credit reporting agencies I'm speaking here about, Experian, Equifax, and TransUnion, produce credit reports for you. So depending on where the creditor or collection agency reports, it will end up at one, two, or all three credit bureaus. Okay, and we're speaking about a huge damage to your credit score. Now, let's talk about that. How do charge-offs actually affect credit scores? Well, an unpaid charge-off is really a significant negative mark on your credit report. These events will typically lower your credit score significantly, as charge-offs are often the culmination of multiple negative reports in a credit file. Most charge-offs result in a bad credit score. And creditors typically report late or missed payments once it's 30 days past due. They usually report monthly, so your credit score takes a hit at the first 30-day late report, and then it takes a larger drop at the 60 days late, another decrease at 90 days delinquent, and so on and so forth. When the account is in the 120 to 180 days past due range, the charge-off lowers an already lowered score. So once it's charged off, the account closes, meaning you can't make catch-up payments to get it back into good standing. It also means the account no longer incurs late fees or accrues interest. However, a new account, the collections account, gets open, further lowering your score. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let me give you the steps that you can take now to remove charge-offs from your credit report. First of all, when we talk about, your options for removing a charge-off depend on whether it was legitimate or illegitimate. Okay. Now let's talk about removing an incorrect charge-off. So credit report mistakes sometimes happen, and that can include an illegitimate charge-off. So an example might be a creditor filing an erroneous report or the account of someone with a similar name getting added to your report. In extreme cases, it could also be the result of identity theft, and that happens all the time. If you need to remove an illegitimate charge-off or any incorrect information, you must file a dispute with the credit bureau that produced the report in the first place with the erroneous item. You can also file a dispute directly with the creditor, and this is kind of important. But see, this only applies if the item is illegitimate. Okay, the Fair Credit Report Act (FCRA) allows you to dispute any information in your credit reports. It also mandates that the credit bureau must investigate any dispute and remove any information proven incorrect. And this is kind of important. Now, let's talk about, so that's for illegitimate item charge-off. Now, what about removing a legitimate charge-off? Now, removing a legitimate charge-off is a far more difficult enterprise, meaning an accurately reported charge-off for a defaulted account is going to take a long time for you to remove it. You cannot request the credit bureaus to remove it, as they are legally required to report all true and accurate information creditors provide. That means you must request removing the charge-off from the creditor or debt collector, which can be challenging. There are two primary methods for making this request. You can request goodwill adjustment, and you can negotiate a pay-for-delete agreement. So when we talk about goodwill adjustment, you can write a goodwill letter to the creditor asking them to remove the charge-off from your credit report, explain your situation and why they should make an exception for you. You will have more luck if you have a long-standing relationship with the original creditor or have other accounts with them. You can also negotiate a pay-for-delete agreement. So with a pay-for-delete agreement, you agree to pay all or a portion of your outstanding debt in exchange for the creditor removing the charge-off from your account. Both options are legal and worth trying, but there is no guarantee that either will work. Creditors and debt collectors have no obligation to remove charge-offs from a credit report. Ensure that you get everything in writing. If you are able to work out a pay-for-delete agreement, right, you need to have things in writing. Whilst I want to quickly remind you of today's topic, we are having a conversation about getting charge-offs removed from credit reports. So the big question is, can you remove a charge-off without paying? Of course, yes, you can remove incorrect charge-offs from your credit reports without paying. If you can prove it's really mistaken, the 3 credit bureaus are legally obligated to remove it from your credit reports. Now, removing a legit charge-off before its scheduled deletion date without paying off the debt is unlikely. However, all charge-offs fall off the credit reports after 7 years, okay? Whether paid or not, 7 years. And it's really important to understand that those 7 years might be difficult for you. And so charge-offs actually will go away on their own, that's for sure. But 7 years, it's really long, okay? Charge-offs stay on the credit reports for those years from the first missed payment. After that, the charge-off is no longer in your report, but you might still owe the debt. The statute of limitations on debt varies from state to state, and the impact of the charge-off on your credit score begins to lessen before it comes off your credit report. With good credit activity, your credit score could rebound from the charge-off within 6 months to a few years. However, lenders might ask about the charge-off even if you have a good credit score, because they just want to cover their ass too. So the thing is that how much will your credit score improve after removing a charge-off? Well, it really depends. Removing a charged-off account from your credit report is unlikely to have a massive immediate impact. If you pay off the debt, it will be reflected as a paid charge-off. Even if creditors agree to remove the charge-off early, your score will gradually recover with other positive credit activity. And so you can improve your credit if you can remove a charge-off. Yeah, that's for sure. Whether you got the charge-off removed or not, improving your credit score requires developing consistent good credit habits. It can take several months to a few years of good credit activity before your score moves into the higher credit score ranges. We're speaking about 650 all the way to 700. And however, anyone can raise their credit score with multiple tactics that I will describe in the next minutes. The first thing you want to do is to monitor your credit reports. Okay, we're talking here about monitoring your credit reports. You can hire a credit repair company. You can make timely payments, and you can pay down debts. Let me break it down for you. So when you monitor your credit reports, basically you are keeping track of your credit reports. This will not raise your score in and of itself, but it will give you the knowledge you need to raise your score over time. It also lets you check for incorrect information that could lower your credit score in the first place. And the cool thing is, under the FCRA, the Fair Credit Reporting Act, everyone gets one free credit report from each of the 3 major credit bureaus every year. You can access your free annual credit report at www.annualcreditreport.com. So this is actually the website where everything gets decided. This is kind of cool. And you can hire a credit repair company. Some debtors prefer working with credit repair companies, especially if they have multiple accounts that must be repaired or reconciled. A credit repair company files disputes for incorrect information on your behalf, which could really include disputing a legitimate charge-off. They can also help you identify other issues affecting your credit and come up with a plan to manage your debt. However, be careful though, because many scam credit repair companies are looking to take advantage of desperate people. You can also make timely payments. That will help you a lot. Making on-time payments and avoiding missed payments is the most reliable way to raise your credit score. So payment history is 35% of your FICO score and 40% of Vantage scores, making it the most significant factor for either credit scoring model. And delinquent payments damage your credit the most, while timely payments help it the most. If you don't have many credit accounts to fuel your payment history or need an immediate credit score increase, consider using a service such as Experian Boost. This can really help you. And this unique service from the credit reporting agency Experian scans your bank accounts for eligible accounts to add it to your payment history. It will try to add rent payments, utility bills, cell phone payments, and even some streaming service subscription payments. Or you can try to pay down debts. Paying down your debts could have a swift and significant impact on your credit score if you currently have high credit utilization. The three credit bureaus use the credit utilization ratio, the CUR, which adds up your total credit balances over your total available credit limits. For example, if you carry a 1,000 balance on a 10,000 credit limits, your utilization is 10%. Getting credit utilization below 30% will help increase your score quickly, and getting under 10% is ideal and could help your score grow by double digits, that's for sure. Boss, I want to quickly remind you, today's topic, we are having a conversation about getting charge-offs removed from credit reports. One thing for sure, no matter what you do not close old accounts. That's really important. Do not close old accounts. You want to keep them open, because closing an old credit accounts could negatively impact your credit score for two reasons. One, removing the account could lower the average age of all your accounts. Length of credit history makes up 15%. Okay, remember this, 15% of your score, and older accounts make you seem more creditworthy. So it could also increase your credit utilization ratio, as that credit limit is no longer factored into your total available credit. So that's important to think about. You want to only use new credit when necessary. So applying for a new credit results in a hard credit inquiry, also called a hard credit pull. So each new hard credit inquiry can lower your FICO score by 5 points. So avoid opening new accounts unless it's really necessary. For example, taking out a debt consolidation loan or opening a balance transfer card could also help reduce your credit utilization ratio. But the positive effect of lowering your credit utilization ratio would outweigh the negative impact of the hard credit pull. So that's something to really think about. But you can also think about opening a secured credit card. This is another possibility. And so we're talking here about secured credit cards are more accessible for bad credit borrowers. And they're called secured because you must provide a cash security deposit as collateral to open the card. And once it's open, you can use it and pay it off to build a positive payment history. You can also consider a credit builder loan. So credit builder loans operate really differently than traditional loans. They are usually for small amounts, and instead of dispersing the funds at the beginning of the loan, the lender sets them aside in a savings account or certificate of deposit. You make regular payments plus interest like a standard loan to build positive credit history. And once you pay off the loan, the lender releases the loan proceeds. So that's really good. Charge-offs. You need to really understand that the charge-offs may actually impact your small business loan options. That's for sure, because a charge-off in your credit history could potentially limit your small business loan options, especially if you don't have a paydebt score and you are actually relying on your social security number, on your personal credit score to get a business loan, right? Commercial lenders consider your personal and business credit when underwriting business loan requests. If you don't have business credit yet, then your personal credit score is weighed more heavily. This is why we tell our viewers and clients all the time to really segregate your business operations from your personal affairs. Even if you meet the minimum credit score requirements, a charge-off could give some lenders pause. They will review your full credit report, and you may have to explain the reason for the charge-off and your actions to actually correct it. You might want to take some time to improve your personal credit score before applying for a business loan. However, bad credit business loans are available if you have a low score but need urgent funding. Okay, and so getting a business loan with bad credit can be challenging. It takes a lot of work. You will likely have to apply to an alternative online lender or a marketplace like UCS, for instance. Traditional lenders like banks and credit unions usually will not issue a bad credit business loan unless you have a great relationship with them. It's all about having the relationship too. So, in addition to having fewer loan options, small business loans for bad credit usually have lower credit limits, higher interest rates, additional fees, shorter terms, and frequent payments. And one way to think of a business loan for bad credit is a form of bridge financing. This could be a good possibility. And bad credit business loans can provide short-term financing to help support operations. And your credit could improve as you repay the loan and grow the business. And that's what you want to have anyway. And once you have a better credit score, and this is good, if you have a longer time in business and higher revenue, you can qualify for a longer term, lower cost loan. The thing is that if you don't have a good credit score, either personally or business wise, you want to have higher revenue. And sometimes you can use the long-term loan funds to pay off the bad credit business loans. And I mean, this is totally possible. So when we talk about getting charge-offs removed from credit reports, you need to understand that bad credit business loans, if you want to go that route, have their pros and cons also, okay? And you got to really pay attention to that, how the whole thing actually impacts your overall financial life. Now, bad credit business loans have let me talk about the advantages here. You have accessible financing for borrowers with a low credit score. We're talking here about people who have a lower than 540 or 590. This could potentially help build or repair credit with timely payments. You might be able to use the funds to pay off existing debts. This is another possibility. You have quick and easy online applications. This is another possibility in terms of lowering increasing your opportunities for approval. And you have usually fast approval and funding times. So this is really good. But with everything in life, you have good things and bad things. And so there are pros, but there are also cons. So let's talk about the cons here. So you have higher interest rates and fees than conventional loans. You have lower borrowing amounts than traditional business loans. You have typically short-term financing with frequent repayments. And this might require collateral or a personal guarantee. And this could also require automatic payment withdrawals. And you have fewer options for lenders and loan types. So this is a really interesting from a holistic point of view. In other words, we're not just looking at your credit from the business side, but also from the personal side. So you got to really think about it. Now, how do you actually get a charge-off removed without actually impacting your full financial life? Well, you can't. It's just one of those things where you want to take a pause for 6 months until you fix whatever is happening with the charge-offs before you start applying for a loan again, or applying for a credit card, or applying for a business loan or business credit card. And that will help you actually rebuild a lot faster, because a charge-off, for all intents and purposes, in your credit report can significantly lower your credit score and cause issues getting approved for a loan or credit card down the road. If the charge-off was erroneous, you should file a dispute with the credit reporting agencies or the creditor that reported it. And so removing a genuine charge-off is the more challenging feat. All charge-offs follow the credit report after 7 years. Just wait. If you can't wait, then do things you can do in the meantime, such as maintaining some kind of financial discipline to make sure that you're getting the results as fast as possible. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about getting charge-offs removed from credit reports, and I'll give you the approach, the steps, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.